discussion is export under GST. Basically, export is covered under zero rated supply in GST. Now, what is zero rated supply? As its name itself suggests that in this kind of supply, government doesn't want to recover any kind of taxes from the supplier. And we all know that in GST, the taxes will be levied on the supplier. But in zero rated supply, there are two types of supply which are covered. First one is supply to special economic zone. Another one is supply as being an export. Okay, but this is covered under zero rated supply. That means in these two types of supply, government will not recover any kind of taxes. Okay, why government don't want to recover any kind of taxes? Because export is very much beneficial for the economic condition of a nation. Government wish to promote export as much as possible because it fetches positive balance of payment, it fetches more and more foreign currency, and it also increases the GDP of our country. And therefore, to promote the export, government has made the provision of refunding all types of taxes on products related to the export. But government also want assurance, surety that the goods which has been declared as being export shall be surely going to be export out of the country, and it will bring the foreign currency in our country. To get such kind of assurance or surety, the export as zero rated supplier, the government has some provision in GST. This provision are, you can export the goods. As far as GST is concerned, there are two ways. First one is with payment of duty, another one is without payment of duty. Now, as I said, government don't want to recover any taxes on export. Then why this with payment of duty? Okay, that means government first of all recover all types of taxes. That means GST. With respect to GST, the government will recover IGST from you, and then later on, when there will be assurance, when there will be proof that yes, these goods have been exported out of the country, you will get the refund of IGST that you have paid for exporting the goods. Therefore, in conclusion, you will recover all taxes that you have paid for exporting the goods. Now, in this case, when you are paying IGST, then in case of paying IGST, you will claim the credit of input tax GST that you have already paid while taking the purchases, while purchasing the inputs on the goods which is related to export. Now friends, as we know that there are two options, with payment of duty and without payment of duty. In case of without payment of duty, we also have again two options. Either go through the LUT or a bond. If you satisfy certain kind of conditions, then you can undergo through signing the letter of undertaking, and you can remove the goods to export without paying any kind of IGST. For this purpose, you must satisfy these conditions. Now, what are these conditions? First of all, these conditions is given in the foreign trade policy of 2015 and 2020. As per these foreign trade policy, you must be a status holder. Now, what is status holder? So there are 5 types of status: 1 star, 2 star, 3 star, 4 star and 5 star. Now, what does this star status holder? For this purpose, we will first of all determine the export turnover of the supplier. Now here, be aware that I am not saying that the overall turnover of the supplier. I am saying that we must understand, we must have export turnover of the supplier. So here, for determining the status holder of a supplier, we must include only the export turnover, not the overall turnover of the supplier. So the domestic turnover will not be covered for determining the limits, for determining the status holder of the exporter. And for this purpose, the export turnover, if the supplier has more than $3 million, he will get the status of 1 star. more than $25 million, 2 star, more than $100 million, 3 star, more than $500 million, 4 star, and more than $2,000 million, he will get the status of 5 star. The another condition is that the foreign inward remittances shall be minimum 10% per annum of the export turnover in the preceding financial year, but it shall not be less than rupees 1 crores. That means his foreign inward remittances shall be minimum 10% of the export turnover of the preceding financial year, but this 10% shall not be less than 1 crore. So if the supplier or the exporter is satisfying any one of the condition, he can sign LUT and export or remove the goods for exporting without payment of any IGST. But along with this condition, he has to compulsorily satisfy one more condition, and that is he should not be prosecuted for tax evasion under any law of amount more than 250 lakh, or we can say 2.5 crores. Now friends, after understanding these conditions, we can come to a conclusion that these conditions are for whom? For whom? Those who are consistently exporting, those who have more and more export turnover, and for those people the government has trust, the government has faith, and in this case the government allow them to export the goods, to remove the goods without payment of IGST and by just signing a letter of undertaking. Now, if these LUT conditions are not satisfied and you have to export the goods or remove the goods without payment of duty, then you have to sign bond or giving a bank guarantee. Now, how much amount of bond you have to sign? For bond amount, say if you are exporting the goods of amount 1 crore rupees and the GST rate on such goods is 18%, then the GST amount will be 18 lakh. So you have to sign a bond of full amount of GST. That means 18 lakh amount of bond you have to sign. Along with this, you have to give bank guarantee. The bank guarantee's maximum percentage is 15%. That means in our law the maximum percentage is given, but again the bank guarantee's percentage, the amount of which you have to give the bank guarantee, this decision is completely depends upon your jurisdictional commissioner. The maximum percentage 15%, but if your jurisdictional have faith on you and trust on you, if you have a good track record, he can minimize this guarantee percentage. He can take it to the 10% or lower, say 7 to 8% or 6%, or he may also say to the 0%. If you have a good track record. In this law, the maximum percentage is given, not lower percentages. Minimum percentage is not given. So I hope you are clear with the conditions of export under GST. Again, this LUT bond is given under the form GST RFT 11. The form number is GST RFD 11, and everything of this procedure can be done online through the portal. I hope this information will help you to understand the concept of export under GST. Thank you so much. Stay motivated and stay calm, keep studying, and all the best.